Have you ever wondered how Warren Buffett, one of the richest investors in the world, built his fortune? What if I told you that you too can apply his investment strategies to grow your wealth? In this video, we will break down Warren Buffett's investment philosophy in simple terms. By the end of this video, you'll understand exactly how Buffett thinks about investing and how you can implement his strategies in your own financial journey. So, stick around because this is going to be a game changer. And hey, if you're new to our channel, make sure to hit that subscribe button and turn on notifications so you never miss out on valuable insights on personal finance and investing. Now, let's dive right in. Point 1. Invest in what you understand. Buffett has a simple rule. Only invest in businesses that you truly understand. He avoids complex industries and sticks to companies with straightforward business models like Coca-Cola, Apple, and American Express. Think about it. Would you invest in something you don't understand? If you don't get how a company makes money, how can you predict its future performance? Question: what's one company you truly understand and believe in? Let me know in the comments. Point 2. Long-term mindset. One of Buffett's golden rules is our favorite holding period is forever. He doesn't chase short-term gains. He plays the long game. He buys great companies and holds on to them for decades. Why? Because time in the market beats timing the market. Many people try to time the market and fail, but those who stay invested in great businesses reap the benefits. Question: are you a long-term investor or do you prefer short-term trading? Drop a comment below. Point 3. Value investing. Buy undervalued stocks. Buffett follows the concept of value investing, meaning he buys stocks that are undervalued compared to their true worth. He looks for companies with strong financials, competitive advantages, and a history of stable earnings. Instead of chasing hype, he focuses on buying great companies at a discount. Imagine buying your favorite sneakers at 50% off. That's how Buffett looks at investing. Question: have you ever spotted a great deal on a stock before the market realized its true value? Share your experience. Point 4. The power of compound interest. Buffett calls compound interest the eighth wonder of the world. He started investing at the age of 11, and today, over 99% of his wealth came after his 50s. Why? Because his money kept compounding over time. The earlier you start, the more your money can grow. Even small investments today can turn into huge sums in the future. Question: how old were you when you made your first investment? Or are you just getting started? Let us know in the comments. Point 5. Emotional control and patience. The stock market can be a roller coaster, but Buffett never lets emotions drive his decisions. He doesn't panic during crashes or get overly excited during bull markets. One of his famous quotes is, "Be fearful when others are greedy, and be greedy when others are fearful." When everyone is selling in fear, he sees an opportunity to buy great companies at a discount. Question: have you ever made an investment decision based on emotions? How did it turn out? And there you have it. Warren Buffett's investment strategy in a nutshell. White heavy checkmark: invest in what you understand. White heavy checkmark: think long-term. White heavy checkmark: buy undervalued stocks. White heavy checkmark: harness the power of compounding. White heavy checkmark: stay patient and control emotions. Now, here's a challenge for you. Try applying at least one of these principles in your investment journey and see the difference it makes. If you found this video valuable, don't forget to like this video, comment your thoughts, and subscribe to our channel for more investing wisdom. Until next time, keep investing wisely